Hello, good morning, good afternoon. I'm going to do a brief analysis on a weekly recap. I'll do basically I'm going to do how to look for order block, mitigation blocks, trading those two, how to trade order blocks and also mitigation blocks. But majorly, I'm going to look for trading of order blocks for now. How to trade order blocks. So when you look at this, you start by marking our market structure. The price is forming. This is a high high. This is a high low, high high, high low, high high. This is a lower high, a high high. This is a high low. Then you came broke the structure. So this is a swing low. This is a swing high. Still we are on an uptrend. So our major area of importance is how to trade the order blocks. The order blocks is this candle which has broken a structure. You see, this structure was broken. So this last candle below, the red candle, it is our order block. So we mark it and wait for the market to come down into it. So we mark the whole body candle like this. Then you switch to M15 like this. You look for your entry. So when you look at this in our M15, you look, the market reacted fully on that level if you look at it, but we can refine it on our lower time frame. We reduced it, so we reduce it to this order block on M H1. So this was the whole thing. So the market reacted from here and pushed upward, but when you look at it, it first cleared liquidity below because of the equal lows, then it's now started reacting to the upside. So this is a break of a structure. This break created. After this break, we mark this candle because it's a candle which pushed this structure to be broken. It came back down, then pushed the market upwards. So we know currently our swing low will be here. This one will be our swing low. You see, this is our swing low. This is our swing high. This is our swing high. So this was the range that we are operating in. When you look at it, we are only operating within this range. This is the range that we were working in. So our break of structure, BOS, is here. Then our order block is this one. This is the last down candle. Call it OB. Then we were to wait for our entry. Now the entry pattern had to form here. You see, this is the entire entry pattern. Then the market pushed upwards. Another pair that I'm going to look at, Audi USD. Audi USD, Audi USD. So this is our H4. So we need to look at the market structure. If you look at this structure, this was an order block which broke the structure to the upside. You see, this order block, this last candle, up, then broke the structure. There was a break of structure here. Then again there was a break of structure here. But why didn't we consider this order block here? We didn't consider it because it is inside our inducement. It can be inducement or our liquidity zone. This order block, this one, it is within our inducement zone because it was not mitigated. Actually, it was mitigated. When you look at this candle, it came and tapped, then moved up. So this was the only candle which was not tapped. That's why we marked it. So we waited for the market to come back down. So after marking our order block, we mark the range. The range is our swing high and also our swing low. So when we mark it all on our H4, we label our break of structure. We are trading order blocks only. You're getting it. So this was a valid order block. That's why when the market came, it reacted peacefully from it. So when you look at it, the market came back down to the order block, tapped from the pattern, then pushed upward. Now this is a weak one because this low was not broken, because this is our low which was failed to be broken. So the market reacted to it and pushed upward. So when I switch to H1, I need to find out to refine it, to give it a brief, to refine it to the point where I can easily see it correctly. So I've refined it. See, the market came back to this level, then tapped it. So this is our H1 order block here. It tapped, gave us a sell pattern. This is QMS, tapped, then pushed upward. It gave us a buy pattern. This is inverted head and shoulder, then push the market upward. But when it was pushing upward, it gave us also a trend to the upside. This was a break of structure. You see, it kept on breaking structure, pushing it upward. So this was a very good market for someone to trade. So we just kept on trading it, trading it, trading it, trading it, trading it, until we went up to our take profit. So this is the way on how someone can trade order blocks. Only you first consider the direction of the market. What do you consider when you're trading order block? Let me write it here. Factors to consider: you look for market structure. Is the market going up? Is the market going down? Then you look for break of structure. Then you look for the order blocks. You look for the order blocks. It can be a bearish order block, bearish or bullish order block. Then entry is on M15. So these are the things that you consider when looking for them. So this is a brief work that I've analyzed on this pair, and this is how the pair has been moving. You swing from this to this up as you take profit, and the pair just moved correctly. So another analysis I look at, still I'm looking for order blocks. NZD card. I switch to H4. So in my H4, I look for order blocks. When you see the market is just going upwards, you see, it has been reacting on this order block. This is the order block which broke the market from this side. Market came back, reacted from it, and went upwards. You see, again, if you look at this break of structure here, we expected the market to come low. We expected the market to come low to this order block, then reacted on it, but it failed to react on it. It pushed up. Again, there was a break of the structure. Still, we expected this market to come back low, to pick and push up. So there was nothing. So here, if you look at it, the market has been trending upwards, but from our order blocks, you see, we have been on a tap in the order block, then we push up. The same also this one, the market just came and tapped after breaking this high. See, this high was broken, the market pushed up, came back, tapped, then pushed up with it. Then we have, this is unmitigated. This is the order block that we expect the market to come. If it's to come, it has to mitigate it. It is the only one which is pending, that the market has not tapped it. So that is a brief example of trading an order block. The best order block, they are the engulfing one, the one which it's engulfed by the candle. Let me give another example of order block USD JPY H4. So if you look at H4, the market is trending down. You see, we're just trending down, down, down. This low, so we had this low which was not broken. So this is our current range price. You see, then we are having this order block here. This is an order block which has not been mitigated. It broke a structure. So we expect this market, if you look at this is our swing low. This is our swing low. And this is our swing high. Then we have a break of structure here, BOS. Now this one, it is an order block, but it is within our liquidity level. So this is liquidity. We expect the market to, this is equal high. We expect it to be broken. Equal high. If the market breaks it, immediate we shall sell from here. So there was a break of structure also there. This was a break of structure. This is the equal high. Then our entry sell is going to be here, short. We shall be having our short move here. So this is a move that we shall be waiting. If it to happen, we shall make our entry from here. Now this is how you trade with order blocks only. Yes, I want to say thank you for this.